Should you sell or rent your house? Very important question. So let's focus on the selling part for just a second. Obviously, the first question to ask is, do you have any equity? If you don't, then renting is probably what you're going to have to do. And you have to also think in terms of what the real estate agents are going to charge you, what there's going to be in terms of closing costs, that sort of thing. So you can usually get a real estate agent to tell you what all the costs and fees are and an estimated sales price. So that'd be a certified market analysis that you can typically get to figure out what you might net proceeds sheet. Okay. Second thing is, do you need the money now? If you need the money now, then that answers the question. If you've got equity and you need the money now, then you're going to sell. It's as simple as that. Third question is does the property cash flow? Now, this may not be as important for some people as others. Some people can afford to take a small loss on a property, but a lot of people, they need to have at least be break even. So what you're going to want to do is you're going to want to get a rental analysis of your property. Most property management companies will do that for you, no charge, and figure out what the market rents are for your property. And then it's a pretty straightforward thing to take what your mortgage payment is and other expenses that are associated with it and figure out if it'll cash flow. Obviously, if you're going to get it managed by a property management company, their fee will figure in there as well, but it's typically not as big as people think it is. It's normally 6 to 10% of that, somewhere in that market. The fourth thing to take into consideration about renting versus selling is what the market status is. All these things may line up, but if the market is just completely dead, and you've got to, your life situation is such that you've got to move someplace, your only option may be to rent it because you just can't, you don't have the time to put things together. And that's the fifth thing. Do you have the energy? And I should have put time there to sell it. It takes energy to sell it because you got to get things ready and all that stuff. Whereas renting it out usually is not quite as much because you can kind of turn it over to a property management company. But selling it's usually a little different routine. Also, again, you need to have the time. If you've got something that's happening in a month or two, you probably just don't have time to get it on the market and get it sold in that amount of time. Okay, benefits of renting. We already talked about the obvious benefits of selling are that you get the cash. So what are the rental benefits? First of all, depreciation on a rental house is real. I'm not going to get into the details of it because your tax situation is going to vary and tax laws are always changing. But let's just say that depreciation is a very real deduction against your normal income, and so you're going to actually save some money. You'll pay less in taxes because you have an investment property. The next point is, do you have a long-term retirement plan? If not, and even if you do, you can get one here paid for by the tenants. Because initially it doesn't seem like very much, like, oh gosh, I'm only getting $50 or $100 a month because the difference between that and the mortgage. Well, keep in mind that you're also getting depreciation during that time, which is making some money, but eventually even a 30-year mortgage pays itself off. So that property today that you're getting $1,500 a month rent for, in 10 or 15 years, you're going to be getting maybe $3,000 a month for, but it'll all be paid. And so for the rest of your life, you're going to be getting $3,000, $3,500 every month. And that's kind of sweet. And the final thing is that real estate is a good protection versus inflation. So let's say you were to get that cash out of your house and you were to put it in a bank account. Inflation is going to eat away at it. So if you got 100,000 in a few years, if you don't have some form of investment strategy there, that 100,000, it'll still be there, but what you can buy with it is going to be less and less. Whereas real estate, even though people focus on appreciation, really what it is real estate's a storehouse of value. And so consequently, if you've got your money in there and it triples in value, it's going to stay up, sometimes even exceed the inflation rate. At the very least, it tends to stay even with inflation. So over time, if the amount of equity you've got in the house will buy you 5 cars and 2 chickens and a gallon of milk, in 20 years from now, it'll probably still buy you that same amount of stuff. It'll just store your value and you won't lose value like sometimes inflation does hurt fixed investments. So there you go. There are the benefits of renting and the difference between renting and selling.